Hello everyone, just doing some more back testing today in between trades, and still back testing these trend trading ideas. Very basic, simple trend trading, and I've just done a back test on the pound dollar, and I deliberately picked the pound dollar because it has been a little bit all over the shop this year, and not really any great trends. So I thought that would be kind of interesting to look at. And this is the daily chart, and I quite like as an indicator for trend direction. The 10 period moving average is quite nice. So I wanted to see what it would be like to trade. Well, as you know, I've been sort of looking at 30-minute time frame for entry, and I wanted to see how the idea of a trend indicator that's very slow to change direction, because I've been looking at some ones that are fairly fast with the higher highs and the swing patterns to change, which changes direction very quickly. And what I wanted to do was see if a very slow change in moving average with the same entry rules and a 4-to-1 risk to reward would still work well. And what would you expect from this? Well, you're going to expect a lot of periods like let's get a pen. You'd expect a lot of periods like this, where you would be taking a lot of consecutive losers. Then you catch these spikes where you get a chance to get 1 or 2 wins. Okay, so you expect periods like this where the majority of your trades are losing, but you're gonna grab a few wins, and that's going to keep your drawdown in check to a certain extent. And then you're also going to expect some nice some nice short trending periods like this, where you're going to likely make more profit than you lose. Some nice kind of wins in there, and you're going to expect to get a few periods where price is going to stay in an uptrend for a long time, and you can really stack up some wins in those periods. And so I tested as far as the data on my live account goes back on the M30, which I think it's about about mid-January, because I can't get enough data before that, I presume, to generate the moving average. Okay, so I tested from 19th of January to the current day, and the returns were 203R. So if you're risking 2% of your account, that's 406%. And I'm not giving you these figures to say, look, this is the way to trade. All I'm saying is perhaps do some testing for yourself, because it kind of a few light bulbs go on when you test something like this, where the win rate is low. You can, even in testing, you can see the periods where you're going to mentally struggle with this, and at the same time, it's really great to see that that higher risk to reward, when it does pay off, then how quickly it removes those drawdowns, and how quickly your profit can grow in a short period of time. Now, what I should explain is I was stacking very aggressively with my test, so I'm just going to explain how I did that. So this period we're we're only looking for longs, so we're just looking for a bar to close up, so that's a valid trade there, and break out on the next bar. Likewise here, and likewise here. And as long as we had at least one retrace bar, then I stacked the next trade. So one retrace bar, stack the next trade, one retrace bar, stack the next trade, a retrace bar, stack the next trade. I didn't trade through this Asian session, but what was quite interesting was there's just as many good entries in there. In fact, it's on the euro, this was the pound dollar, but definitely on the euro yen, there's some great entries in there. Okay, so this would be your next trade, and that one stops out, and the next trade, and then stack again here, and then a retrace bar and stack again here. So you can see I was being really aggressive with the stacking, and the reason I wanted to do that was because it's mechanical, so I can't start curve fitting the trades that I would have taken and would have left, because I can see already what's happening in the future. You'll often find out with backtesting, let's say there was a discretion on the entry, the fact that you know it's going to be a winning trade is going to play on your decision making. So I wanted to be mechanical in how I took the entries, and then going on from that, you can say, okay, being aggressive does work, but maybe that's too much risk for me to take on, so I'm going to only stack if the previous trades are positive. Okay, so then go and test that and see if that slightly less riskier version fits in with your own sort of risk profile. So that's it. That's what I did. It made really good results. Like all of this testing, the higher risk to reward gives you a lot of get outs. You only really need a few periods where the market moves in sync with what you're sort of trying to do to sort of give you profit. Like I said a lot of times, the drawdown is the drawdown, the massive runs of consecutive losses. Okay, and they're sort of 20 plus trades you can lose. You grab the odd winner within that, which kind of keeps things under control, but it does seem like you're just taking loser after loser, especially with this aggressive stacking. So it's just something, perhaps if you kind of not never really been into this sort of trading, doesn't appeal to you, it's worth an hour or so of your time to run some tests and see if you can sort of generate similar returns, because it's certainly not tied to this 30-minute time frame, so you can definitely expand that out. And any programmers out there, should be fairly easy to program into an EA if you fancy it. I should say on the take profit, I was pretty much using a strict 4-to-1 take profit, and if I had, say, 3 trades stacked up like this, I'd move the furthest away from price to break even. Okay, so using some move to break even, but not very often, only when I had sort of trades stacked up. So that's it. Leave me some comments, and I'll do another video shortly.